Wow. Get ready because what I'm about to show you will blow your mind. XRP, a type of digital money, is moving in a way that's making the Federal Reserve, the people who control American money, take action. And the newest information shows that something huge is happening under the surface of the markets. We're talking about XRP, Bitcoin, Ethereum, and all digital money, and how it connects with regular stocks, bonds, money flow, and the Federal. If you own any digital money at all, you're going to want to listen closely because what's happening right now isn't just random noise. It's setting up the stage for the next big market wave. This is not advice on what to do with your money. Right now, XRP is selling for $289, up more than 2% earlier this morning. Bitcoin is down about 1.72%. Ethereum is down about 3%. But here's something interesting. The S&P 500, which tracks big company stocks, is up today. Regular stocks are doing well, while digital money is going down. That's something you don't see every day, and when it happens, it's like a signal. What we're really watching here is how traditional markets and digital money aren't moving together. Usually they move the same way based on how much money is flowing around, but right now they're going in different directions. That means something is changing underneath. And if you can read this change correctly, you can get way ahead of everyone else. By the way, if you're serious about not just following hype, but actually putting yourself in position to spot the next wave of monster plays before they explode, I've put together something that you'll want to check out, that it's called the Ultimate Millionaire Investor Guide. Find 100x stocks. Inside you get access to a full breakdown, papers, pictures, video, and more, giving you the exact recipe that the smartest money uses to find those once-in-a-lifetime opportunities. I pinned it for you in the top comment below this video.so. After we dive into this XRP breakdown, make sure you grab it. Trust me, you don't want to miss what's in there. Now, back to XRP and the bigger market picture. Let's talk about what the Fed is dealing with right now. We just got fresh U.S. jobless claims data. 237,000 actual versus 230,000 expected. That's higher than what people thought, meaning more people are filing for unemployment. .by itself. That's a signal that the job market is getting weaker. For the Fed, this type of information pushes them toward cutting rates. Why? Because when the job market gets weak, the Fed worries less about prices going up too fast and more about keeping the economy from slowing down too much. Lower rates mean it's cheaper to borrow money. And when money gets cheaper, risky things like digital money do really well. But here's the twist. It's not just jobs. Money flow itself, the lifeblood of the money system, is drying up. The Fed's reverse repo facility, or RRP, which is basically where big companies park extra cash, has dropped to just $21 billion. To put that in perspective, RRP usage has been down over $2.5 trillion since late 2022 and almost $440 billion since June of this year alone. That is a huge amount of money flowing out. Big companies are pulling cash out of RRP to buy up treasury bills as the U.S. government floods the market with debt. Now, you might be thinking, what does that have to do with XRP, Bitcoin, or Ethereum? Everything, because when extra money dries up, it costs more to borrow money and markets get tighter. Stocks feel pressure. Digital money feels pressure. But here's the other side. A tight money environment like this forces the Fed to act. If they don't cut rates soon, the system could get stuck. And when they do cut, that's when risky investments catch fire. And make no mistake, XRP is position rig. HT in the middle of this. It's not just about regular people buying and selling coins. Anymore, big companies are circling. Public companies already hold over 1 million Bitcoin combined, and there are only 21 million that will ever exist. That's before counting what governments and exchanges hold. Do the math. The amount available for everyday people shrinks every single year. And XRP is entering that same conversation with its usefulness and payment settlement becoming impossible to ignore. Now, one of the biggest headlines hitting this week was Coinbase cutting its XRP stash. Data from XRP scan shows Coinbase went from holding 780 million XRP down to just 199 million. That is 69% cut in just a matter of weeks. They used to be the 5th biggest holder of XRP. Now, they've dropped to 10th place. That is not a small move. It's shaking people. The quick reaction is, oh no, Coinbase is selling. That must be bad news. But let's break it down with logic. Why would an exchange cut its XRP holdings like this? There are two likely reasons. Point one, after the SEC case ended, a lot of big holders who had been keeping money on Coinbase for either potential sales or backing started pulling them off. Remember, big holders don't keep long-term holdings sitting on exchanges unless they need them for trading or staking. If big holders took money out, Coinbase reserves naturally shrink, but that's not Coinbase selling. That's customers moving money. The second possibility, demand flow changing. Earlier this year, XRP had monster volume, especially when the court ruling came down. But as price pulled back under $2 recently, demand eased a bit. That reduces exchange balances. Both explanations are normal, and neither screams disaster. In fact, long-term holders see this as short-term noise. And guess what? XRP has still held strong above 280 even with this news. That's strength. Let's connect this to the bigger setup. Right now, the fear and greed index for digital money is sitting in neutral. That's rare. It means the market is perfectly split. Half leaning scared, half leaning excited. That's exactly the kind of confusion that comes before a breakout move. September historically isn't the nicest month for markets. We've seen rocky action before. But when you get this type of neutral setup with tightening money flow and the Fed cornered into rate cuts, the spring is being wound tighter and tighter, and the chart action backs it up. That XRP, Bitcoin, and even Ethereum have all flash sell signals on their 1348 EMA crossovers after running hard in recent months. That doesn't mean the bull market is dead. It means they're cooling off after big runs. Bitcoin is down about 11% from its recent high. XRP is down about 23%. Solana is down about 33% from its recent peak. Those numbers might scare weak hands, but veterans know. Pullbacks like these are the warm-up to explosive continuation moves when conditions line up, and the conditions are lining up. Money flow is tight, pressure is building, and probability trackers now show over 94% chance of a Fed rate cut coming soon. That's up from 84% just last week. Cuts unlock fresh flows into high-risk things. Money has to go somewhere, and when it's cheap, it chases gains. That's digital money. That's XRP. That's where the action is heading. So let's zoom in on XRP setup specifically, because while Bitcoin always grabs the headlines, XRP's movements lately have been sending signals of their own. After touching that $3 zone and pulling back under $281, it's been staying in a range that tells us people are buying and holding. Every time it dips, buyers step in. Every time it tries to run, sellers hit it down. That tug of war doesn't last forever. When you see neutral feelings stay in a range, and less wild price swings at these levels, it usually ends with an explosive break one way, or ONO, the R. And the wild card is usefulness. Unlike a lot of tokens that live or die purely on guessing, XRP has something unique. Cross-border payments, settlement infrastructure, real adoption conversations with financial institutions. That's a game changer. When you layer that on top of a big-picture environment that's about to make money cheaper again, the risk-reward starts to tilt, because once fresh money flows in, the projects with real use cases always get picked first. That's why XRP isn't just lumped in with random altcoins. It's in a category of its own. Now, think about what we just covered with money flow. The Fed's reverse repo balance crashing, trillions leaving since 2022, hundreds of billions just since June. That's not a small adjustment. That's huge plates shifting under the surface. Big companies are moving money from parking cash into treasuries because the U.S. government is flooding the market with debt. That means the supply of treasuries is exploding, yields are rising, and investors are moving cash to chase those yields. But that can't continue forever, because eventually the cost of that debt becomes too much to handle. That's why the Fed doesn't really have a choice anymore. Markets know this. Look at the chances. 94.4% odds of a rate cut. That's basically the market screaming at the Federal. We know what you're going to do. The Fed doesn't like to surprise markets. They like to guide expectations and then follow through. So when you see odds jump from 84% to 94% in a week, that's telling you the train has already left the station. The cut is coming. And when it hits, the boost of momentum will hit every corner of the risky investment world, including digital money. And here's where timing becomes critical. If XRP is staying under $3, right,